Without further ado, the first goodwill message delivered uh, on behalf of the Nigerian High Commission to the United Kingdom. He's a friend of the house. Alhaji Magaji Bada is a Minister Counselor, Industry, Trade and Investment, representing the High Commission today. For your goodwill message, sir.
Good morning, ladies and gentlemen. If I had known I was going to go after Lawrence, I wouldn't have come. So, unfortunately, we can't stand on existing protocol. We have to establish it again. So, Honorable Florence Seshalomi, UK Trade Envoy to Nigeria, Mr. Joe Popola, the Africa Lead at the Institute of Directors, Prince Abimbola Olashore, President of the Nigerian-British Chamber of Commerce, Your Excellencies, ambassadors and representatives of high commissions, the CEO of First Bank, distinguished ladies and gentlemen. It is an honor to be a part of this auspicious gathering of great minds and institutions, enthusiastic in the purpose and shared vision of exploring the economic outlook of Nigeria and the United Kingdom for the year 2026 and beyond. This gathering today demonstrates the willingness of the Nigerian-British Chamber of Commerce and the Institute of Directors to critically reflect on recent reforms, policies, and investment opportunities that will bring about substantive progress to the economic growth of both climes. Let me start by commending the NBCC for their consistency, hard work, and commitment over the years. Their constant zeal towards improving the economy of Nigeria, especially through trade and investment, cannot be overemphasized, as they continue to create a platform to shed more light on the existing trade relations between Nigeria and the United Kingdom, as well as the opportunities that lie therein for both countries. Similarly, I'd like to applaud the IOD for their constant support, training, and network platform to develop skills and assist in promoting high standards of corporate governance, professional integrity, and creating awareness for favorable business conditions across Africa. The collaboration of the NBCC and IOD could not have come at a better time than now, considering the strong economic relations Nigeria and the United Kingdom share. This is demonstrated in both countries' drive to continually explore various key areas to participate in each other's economies. It is important to mention that the economic partnership between Nigeria and the UK has spanned for several decades, built on historical, cultural, and commercial connections. Nigeria, as Africa's biggest market and largest economy, is not only rich in resources, but also has great potentials in human capital. Our youthful population, vibrant technology and creative sectors, coupled with the renewed hope agenda of the government, have seen that economic reforms have made the country an attractive destination for sustainable trade and investment. It is imperative to mention that Nigeria offers a wide range of investment opportunities, which could be harnessed in the areas of real estate, infrastructure, healthcare, biotech, creative economy, financial services, technology, clean energy, education, agribusiness, agri-tech, and digital transformation. The opportunities for collaboration are vast, where we can build resilient value chains, create jobs, and unlock trade flows that benefit both countries. Distinguished ladies and gentlemen, today, let us reaffirm our shared commitment to economic cooperation, guided by trust, transparency, and long-term vision. Let us turn dialogue into action, ambition into achievement, and actively engage with each other and other stakeholders with a view to establish robust economic partnerships that will be of mutual benefit to both countries. I look forward to receiving the NBCC delegation when they return to London for their 49th annual trade mission. on the starting 25th of March 2026. On behalf of the government and people of the Federal Republic of Nigeria, I thank you for your attention. God bless you.
Thank you very much, Your Excellency, for a well-delivered speech, even though it was advised of his presentation this morning, but I think he handled it very well. Thank you very much. So even though this is the Nigerian Economic Outlook, we now have, I told you Africa is a big village. So our next goodwill message is coming from His Excellency, the High Commissioner of Ethiopia to the United Kingdom, a very dynamic person, His Excellency Ambassador Biruk Mekonnen. Over to you, sir.
Good morning. I'm not here to promote the trade mission mentioned by Joy. For that, I think I encourage you to continue connecting with Joy and also Agnes, I see in the room, East African Association. Just to deliver my goodwill message, Honorable MP, Trading Boy for the UK, distinguished guests, Excellencies, ladies and gentlemen. It's a great pleasure to join you at this important forum, and I commend the Nigerian Business Chamber of Commerce, the Institute of Directors for Africa, and all partners for convening policymakers, investors, and business leaders at such a pivotal moment for Africa-UK economic relations. The UK's new approach to Africa, with its strong emphasis on trade, investment, and genuine partnerships, is both timely and welcome. It reflects a clear understanding of what African economies need today. Not aid-led engagement, but collaboration that mobilizes private capital, strengthens value chains, and delivers shared prosperity. Across the continent, economies such as Nigeria, one of Africa's largest, and Ethiopia, among the fastest growing, are demonstrating the scale, dynamism, and workforce potential that make Africa increasingly compelling for global businesses. Our two countries have also built strong and practical economic relations grounded in trade, investment, and private sector leadership. A powerful example is the Dangote Group's multi-billion-dollar fertilizer investment in Ethiopia, which illustrates Africa's growing capacity to invest in itself, transforming industries, strengthening food security, and changing long-standing narratives. These developments point to a broader reality. Africa's opportunity is no longer national, it is continental. Through the African Continental Free Trade Area and the Developing Countries Trading Scheme introduced by the UK, investing in one African country economy increasingly provides access to a connected continental market as well as the UK market. This integration creates scale, resilience, and greater certainty, making Africa an even more attractive destination for UK and international investors. In this context, forums such as today's are essential. They help move us from policy alignment to practical partnerships and from ambition to bankable outcomes. I wish the discussions every success and look forward to a deeper, more ambitious Africa-UK economic partnership in the year ahead. I thank you.
Thank you very much, Your Excellency. I think I should take my own advice and use the steps. But this time I come this way, It's not easy. This gray hair means something, not just wisdom. So thank you very much, Your Excellency. Now we're on to the first keynote speaker. I've heard him speak before, so I think we're in for a very good ride, so to speak. His name is Dr. Yemi Kale. He's the Group Chief Economist and Managing Director for Research and Trade Intelligence for Afrexim Bank. But he was also the Chief Statistician of Nigeria. So he was the one compiling all the economic data. If there's anything, if there's something you spot in it, talk to him. Dr. Yemi Kale, sir, over to you. Thank you very much. Please come, sir. But, just to let you know, it's to be a 30-minute speech or talking, and then a 10-minute Q&A afterwards. There'll be the roving mic. You keep your questions very short and straight to the point. Thank you, sir.
Distinguished ladies and gentlemen, good morning. And I want to start by thanking the NBCC and the IOD for inviting me to deliver this presentation. How do I control this? Okay. The outline of my presentation is on the screen. As you heard, I have 45 slides, but 30 minutes to deliver them. I don't want you to have to walk to the stage to kick me out. So I'm going to be moving very, very quickly. I'll have to skip some of the slides. But since the presentation will be left behind, I guess that should be fine. So the first question you might ask is, why does this matter? What is new? What don't we already know about Nigeria? We have a room full of mostly Nigerians who live in the UK. So what am I supposed to discuss about Nigeria and its relationship with the UK? We have heard enough about Nigeria's potential. We hear this every year, every time. This is not news. We have also dissected the various reasons over and over for many years why Nigeria, despite that huge potential, has failed to realize its potential. We've heard this over and over again. So why now? What is different? What is new? After decades of reforms, reversals, resets, why are we looking at Nigeria again to speak about some of the same things? The answer to me is convergence. I believe that for the first time in a very, very long time, several positive factors in the global, Africa, and Nigerian environment are all converging. That makes it an extremely good opportunity for Nigeria to actually, for the first time, meet that huge potential that we've been talking about for many years. So let me start with the macro fundamentals. Especially in case I don't get to finish all the slides in my presentation, at least this is going to be the key reasons why we're talking about Nigeria again. So let me start with the macro fundamentals. Inflation, which stood at nearly 35% at the end of 2024, has fallen decisively to just over 15% by the end of 2020, by the end of about 15% as of January 2026. But this is not really, it's not just cosmetic progress. It reflects deep adjustments in FX pricing, monetary tightening, and a reduction in imported inflation pressures. At the same time, Nigeria has normalized its FX regime, as we've heard already today, after decades of distortion. So today, the gap between the official and parallel markets, which was long a symbol of policy inconsistency, has narrowed substantially, improving transparency. It has boosted foreign exchange reserves. It has increased liquidity as well as investor confidence. At the same time, fiscal consolidation too is improving. Revenue mobilization efforts are strengthening meaningfully, creating space for expenditure rationalization, also reducing reliance on monetary financing. So taken together, this shifts place Nigeria what I would like to describe as a rare macro reform convergence point. So in the past, maybe one or two of these things was working and the others were not. But now it's as if they're all working simultaneously. And it's also keen in also to developments in the continent. I'll speak about it later. For example, the African Continental Free Trade Area is speeding up. Africans are understanding the importance of investing more among themselves, speaking more with themselves. And then the global uncertainty, disruptions, which should actually be a problem, is actually forcing all of us, Nigerian, African countries, to understand that we need to hedge against such issues and work more with ourselves. So we are talking about investing more with ourselves. We are talking more about trading more with ourselves. We are talking more about changing the model of exporting commodities to non-African countries and importing finished products from non-African countries back into Africa. Regional value chains have been developed. So all these things are converging. It's creating a huge opportunity for Nigeria. So, like I said, a rare macro reform convergence point. Also, macro stabilization is also occurring. But macro stabilization alone is not the only story in Nigeria. Nigeria remains Africa's largest consumer market, as you all know, over 220 million people, one of the world's richest natural resources, and it continues to serve as the anchor economy for West Africa at a time, like I said, that the AfCFTA is gaining fast traction. And Nigeria, given its peculiar opportunities, has a huge role to play in exploiting and is already taking steps to do so. So for UK investors in particular, Nigeria is not just an emerging market, it's a natural gateway into Africa shaped by our deep diaspora network, huge diaspora network, financial services linkages, as well as long-standing commercial ties between both countries. And importantly, the recent reforms that you heard a few speakers mention earlier, FX liberalization, the subsidy reforms, the tax adjustments that I mentioned, they're already beginning to translate into behavioral change. In 2025 already, we saw foreign portfolio inflows exceed $20 billion, signaling that credibility, while still fragile, is being rebuilt in the Nigerian economy. So these key issues. So the key issue now is not whether these necessary reforms that have started are actually working. The key question is, I think we should ask, is whether or not they will be sustained. So against that backdrop, I think the central question, some of which we should ask the panelists later today, would be first, will inflation continue to fall? Because those are things that actually matter. Or have we reached the easy gains? And related to that, can FX stability that we are witnessing today, can it be maintained without reverting back to controls when pressures reemerge? Second is the question of durability. Will the subsidy and FX reforms survive political cycles? We know not just in Nigeria or in African countries, everywhere in the world, governments tend not to take difficult reforms closer to elections for obvious reasons. Nigeria can't afford that. And if you check Nigeria's history, a year or two, well, our election period starts 2 years before it actually starts. And usually, we don't like to take difficult reforms. It's not a Nigerian thing. Even in more advanced countries, that's also, you don't push unpopular policies before elections. It's gonna burn. And that's why you usually find that most African leaders, the ones that want to perform, do better in their second term because, well, you can't do anything about it. They're living anyway. So they're more encouraged to push difficult reforms, unless, of course, they are pushed back by their parties, because the parties want to win the next election. They don't want you to come and mess things up for the next person. But normally, I mean, nobody wants to push difficult reforms. So the question is, we hope this time around it will result in a reversal of these extremely important reforms. Third, from an investor's perspective, where are the strongest risk-adjusted returns? Those are the questions which we're asking in this kind of forum. Which sectors genuinely aligned with the reform priorities, uh, rather than the usual rent-seeking behavior we're used to? And finally, what role should UK partners, UK diaspora investors play in this process? Will the UK continue? I think we already heard that they will continue to act as a strategic investor and financier, and can the huge Nigerian diaspora sustain its role as patient capital, bridging trust, information, execution gaps, and so on? However, to answer these questions properly, we need to widen the lens from Nigeria to Africa and to the global environment. So starting very quickly with the global environment. Nigeria's outlook is unfolding against a relatively favorable global and African backdrop. Global growth is entering 2026 with what I've described recently as an asynchronized an uneven soft landing, moderating around 3% in 2025, slightly lower than the 3.3% in 2024. And it's expected that a similar 3% would be recorded in 2026 and 2027. And these are significantly lower than historical levels. So that's why I said what we are seeing more is more like is more stability on the global economy rather than transformative growth. So we're entering that era of stability. Very importantly, the global economy has avoided a recession, which most people feared earlier 2025, when names with health started creating disruptions in the. I'm going to the US after this. I want to ensure that I am able to make it in. So I won't mention any names, but I'm sure you all know what I'm talking about. Despite the disruptions, the global economy still still was able to grow. So it's more stable growth that we're witnessing currently. But like I said, this benefits countries like Africa. Um, Traditional rules are changing. Um, Previous partnerships have been disrupted. That's forcing, like I said, African countries to look inwards. It's also forcing extra African countries to look towards Africa as a solution. So it's actually benefiting Africa, benefiting Nigeria in the process. So the disruptions from the gentleman in question, I think we should send a very nice thank you card, because it's helping African countries get their act together. And I actually wish, and I'm happy that this is just the first year, so we have 3 years at least to get our acts together. But it's not on the global economy, it's not the 3%. It's not the key message I'm trying to give a pass here. It's not on the global, it's not on the growth rate of 3%. It's not the level of growth that matters. It's actually divergence. It's the fact that growth patterns are diverging. It's the fact that policy paths are now diverging. The fact that capital regimes are also diverging. And increasingly, financial conditions, asset pricing are all diverging at the same time. Accordingly, global monetary policy is no longer synchronized. We now have central banks across the world operating on entirely different cycles, even central banks within the same region. And this is not usually the pattern historically. As a result, liquidity conditions, currency dynamics, and risk pricing are fragmenting across regions and countries, and even across countries, and even um, within regions, and even countries within regions. Unlike the past, like I said, where it was more predictable and more synchronized. Now, this fragmentation I mentioned fundamentally changes how capital moves. For example, in the past, capital flowed broadly to, you see the analysis, they will say emerging markets, African markets. That's the target environment. Now, investors are not looking at regions or groupings. They are looking at individual countries. At the same time, global inflation is also decelerating, falling from 5.9% in 2024 to 4.2% in 2025. It's expected to drop to the middle 3% in 2026. This will allow central banks to continue to pause or begin easing interest rate, or continue easing interest rates. And this global disinflation and the end of what seems like the end of aggressive monetary tightening is improving financial conditions and risk appetite for emerging markets, including those in Africa as well as Nigeria. Against this backdrop, Africa's macroeconomic environment has improved significantly. Africa's economy is projected to have grown by from 3.4% in 2024 to about 4% in 2025 and is expected to accelerate further to 4.3% 2026, outpacing global average. So that's what I said earlier. Despite the disruptions in the beginning of the year, 2025, the African economy actually grew much stronger than it did previously. Um, so we weathered the trade wars in the earlier 2020, in early 2025 that many actually thought was going to hit the continent significantly. We weathered all the geopolitical tensions, all the supply shocks. Africa is actually going stronger, and the expectation, the outlook is it would even go stronger in 2020, 2026 and 2027. However, when we disaggregate African growth, we observe that the strongest performers, and this is why it's very important for Nigeria, the strongest performers on the continent share a common pattern. The reform-minded and diversified economies are the ones leading growth, while the resource-dependent or fragile or static ones are lacking behind. So countries like Cote d'Ivoire, Ethiopia, Nigeria, Ghana, Kenya. It's very fortunate that I mentioned the countries whose ambassadors are in the room. I didn't know they were coming. That was not. That was just a coincidence. They are sustaining growth rates of between 4 to 6%, and they are making deliberate choices about how growth is generated. Now, these countries are investing at scale in infrastructure. They are investing in energy, manufacturing capacity, and services, while pairing those investments with export diversification and deeper integration into regional and global markets. So what distinguishes these economies is reform and execution, the countries that are leading growth in Africa, that expect to lead growth in Africa in 2026. They all operate more flexible foreign exchange environment that allow price discovery. They all anchor fiscal policy, incredible revenue mobilization frameworks. They have all reduced over-reliance or are trying to reduce over-reliance on a single commodity as the primary source of their growth and external earnings. And the result is lower execution risk, stronger competitiveness, and an improved ability to attract long tenure, high quality capital. And that has direct implications for Africa, for Nigeria, for their businesses and financial institutions. It means African markets will increasingly be segmented into the reformers and the non-reformers. And in this environment, investors are increasingly selective, rewarding countries with credible policies, stable FX regimes, and those that have sustainable debt profiles. This means that two countries with the same growth rate, which in the past would have meant going to those two countries with the same growth rate, may face very different funding costs. They may face very different market access, and they may face very different investor appetite, simply because one is perceived to be managing policy well, while the other is not. And like I said, it's on that reason why Nigeria matters now. Against this evolving global backdrop, Nigeria is entering, like I said, what I described earlier as a reform rebound phase. And we're now among the peer group of reform credible African economies. And like I said, macroeconomic stabilization is also taking hold. But macroeconomic stabilization is not an end to itself. It is merely the foundation upon which growth, trade, and investment decisions become viable again. The bigger challenge and opportunity lies in what comes next. Stabilization that we are facing today must be translated into structural transformation and improved confidence. And the improved confidence we are seeing today must be converted into sustained investment. So macro reforms must be aligned with trade expansion, must be aligned with industrial scaling, and must be aligned with more deeper regional integration. So I think this is the real conversation we must be having now. That is, how can Nigeria maintain reform momentum and macro stability long enough so it matters? How should Nigeria anchor its recovery not merely as a rebound story, but as a platform for durable, inclusive growth. So with that context, I will now very quickly turn to Nigeria's growth trajectory and what I believe is driving it. And like I said, the central question here is not whether growth is real. It is. It's rather whether Nigeria's growth rebound is narrow and fragile, or is it broad-based and durable? Okay, so Nigeria's economic growth, I think I'll skip a lot of this. I think we are familiar with most of these indicators. Nigeria's economic growth is on a modest upswing after recovering to 3.4% GDP growth in 2024. The economy accelerated to about 3.9% in 2025, and the forecast for 2026 is between 4.2 to 4.5% in 2026, depending on who you speak to. At Afreximbank, we have 4.2%, more conservative, but we tend to get it, we tend to be more accurate most of the time. Now, while this trend is noteworthy because it outperforms the global average of 3% I mentioned, it also aligns with the African average rate of 4%. I have to state that it is still, nevertheless, well below Nigeria's potential, which is about 7%. But that all just tells you that there's huge opportunity. And it's also broad-based. It also helps because the oil sector has supported that growth. Let me explain. I think I explained that let me go back to my second slide very quickly to explain this point. What I put here as political and macro dysfunction, the macro dysfunction part refers to the fact that we say Nigeria's economy oil and gas accounts for 5% of Nigeria's economy directly, but indirectly it affects over 60% of the economy. And that's really the story. So anytime the oil sector is in recession, it prevents everything else from moving. And that's why the oil sector was in recession for almost, I think, 12 or 14 quarters. And that's why Nigeria's growth just stagnated between 2 and 3%. Now that the oil sector has become positive, now that oil production has increased, now we are seeing a bit more traction. So a lot of people, we have an economy that is 5% oil and 95% non-oil, but in that non-oil sector, 60% of that non-oil sector is dependent on that 5%. So in reality, the oil sector is dead. You only have 35% of your economy that can function. So that's one of the challenges. So ironically, to diversify away from oil, we actually need the oil sector as well to help us to diversify away from oil. We cannot neglect the oil sector and focus on diversifying the non-oil sector. We need the oil sector to be able to diversify away from oil. And that's the point I'm trying to make here. Looking ahead into 2026, key growth drivers, I think they mentioned the Dangote refinery, also the investments in infrastructure, the various public-private partnerships, the gradually improving business climate due to the ongoing reforms. Again, I have to stress that the 4% expected is still much lower than our potential, and is even still much lower than the pre-2015 5% plus growth that we recorded, which just suggests that there are still structural constraints and more reforms that need to be implemented. And that's why I said keeping faith with reforms is what's going to determine whether or not we break away from the potential without being realized to actually potential being realized. Now we have 54 African countries. It's important to look at Nigeria relative to the other countries within the continent, many of whom are recording impressive macro indicators similar to Nigeria. When we compare Nigeria to its peers, Nigeria has three relative advantages that stand out. First, scale and diversification, and the domestic market itself, with a population of about 220 million, an economy exceeding $300 billion, as well as rising urbanization, digital adoption, and services demand. Nigeria has an internal demand engine that few African countries can match. Second is the reform momentum that I mentioned, which has already begun to yield measurable macro gains. So while many peers remain constrained by structural limits or fiscal stress, Nigeria's unique combination of scale, diversification, market size, and accelerating reform momentum is positioning it to for a more durable growth path. A major macroeconomic success for Nigeria in 2025 has been the sharp deceleration in inflation. Headline inflation hit multi-decade highs in 2023, about mid 30%, exacerbated by that one-off fuel price jump following the subsidy removal. But like I said, it has come down significantly since then. Um, and though supported by steadfast monetary tightening, as well as relative exchange rate stability. Um, Food price growth, which has been a major driver of inflation in the past, has slowed down significantly, easing pressure on household budgets. The central bank maintained a very tight policy stance of Nigeria, maintained a very tight policy stance for most of 2024 into 2025 to signal its anti-inflation resolve, and with clear signs that inflationary pressure um, has started receding, prompting the CBN to initiate its first monetary policy easing in 5 years, sometime in late 2025. So a small cut in the monetary policy rate was implemented, and further gradual data-dependent rate cuts are on the table for 2026, providing inflation continues to trend downwards. The outlook from the CBN, which actually we support, is for inflation to average 12.9% in 2026, and this is a marked improvement from the average of 21% in 2025. So again, improving macroeconomic fundamentals. Okay, I think I'll just keep this in the interest of time. But like I already mentioned, monetary policy is now entering a new phase where um, it is tight enough to preserve credibility, but is flexible enough to unlock growth. The tightening cycle achieved three critical outcomes. First, it's restoring rather positive real interest rates. It reduced speculative FX demand and is strengthening saving incentives. Second, I actually have, for the first time, I actually have a lot of friends that are based in the UK and the US actually wanted to hold Naira assets. Significantly try to hold Naira assets, unlike the reverse was the case a couple of years ago. Second, it helped to stabilize the FX market and narrow parallel market distortions. And third, it anchored inflation expectations, allowing households and businesses in Nigeria to plan rather on the assumption of declining inflation rather than persistent instability. Finally, Nigeria's financial landscape is undergoing, Nigeria's fiscal framework is undergoing a structural reset. We mentioned subsidy removal, the tax reforms, and a shift towards capital focused spending are all improving sustainability. If you go through all the fiscal ratios in this regard, the expectation is for them to improve, whether it is tax to GDP ratios, tax to revenue ratios, the balance of payments, capital, the government revenue. In general, government revenue is expected to increase. The fiscal deficit is also expected to improve significantly as we enter 2026. At the same time, Nigeria's debt to GDP ratio, Nigeria's debt, sustainability of Nigeria's debt is probably one of the few challenges the country still faces. Yes, debt to GDP is still low at 30 to 40% by African standards. But as we know, that is not, debt sustainability is not about, it's more about affordability, not just about size. So your debt to GDP may be relatively low, but Nigeria's debt service to revenue ratio has been extremely high. In 2022, for example, government was reportedly spending over 80%, at one point over 100% of its revenue servicing debt, which is a concerning figure. So the solution, and I think that's what policymakers are pushing, is revenue. You have to increase the revenue. And a debt to GDP ratio of 40 to 45% and a debt to revenue ratio of 80, 90%. Only says one thing. It just says the problem is revenue, not necessarily debt. It says the revenue does exist in the system. You just have to find creative ways of extracting it out. And that's the focus. And one of the problems that we have is that Nigeria, like many African countries, have a huge informal sector. About 50% of the economy is informal. So you're really, I mean, when you have a GDP of 300 billion, you're saying 150 billion not even part of that. Now, if you look at debt to formal sector revenue, then you see that it is bigger than expected and in line with most advanced countries, because that huge informal sector is not taken into consideration. It makes the problem, it's creating more of a problem. I've always advocated trying to get more of the informal sector into the formal sector as a solution, and not necessarily just increasing VAT and increasing tax rates. Because what you are doing is just punishing those that are already paying. But you know, it's harder to bring in the formal sector. I always come up with very simple and practical suggestions that might sound actually quite stupid, but it can work. For example, like I gave an example in one where advising government was, and I said, I take the transportation sector, for example. It contributes about 3% of GDP, and over 90% of that sector is informal. Now, now imagine we do something that occurs everywhere, like in the UK, where we, rather than the road safety people chasing everybody looking for triangles and all that, you enforce using meters within the transportation system. So you are going after taxi cabs or buses that don't have meters. Now these meters are connected to this central system. So as they are collecting their revenue, government is collecting its cuts, and they use their efforts to go and tackle all these people. Another one is most Nigerians have what we call domestic, trying to look for the politically correct term, domestic support. Almost every household. We pay them cash, but across the entire household, it's a huge amount of money. They're involved in consumption, but it's not taxed. Now, imagine if we create a policy or a law that says you must register all of this domestic support. If you are caught with one in your house that are not registered, then you're in trouble. Now, the domestic support will be happy, and then you can enforce minimum wages and all these things. And you're also safe because they are registered, so whoever you're bringing in your house, you're more relaxed. Now, the domestic support will be happy to earn 50,000 naira and pay 10% as tax, and be left with 45,000, than to earn 15,000 naira and not pay tax. So you have incentivized that domestic staff to join the formal sector. So in silly ways like this, very, very simple ways like this, you can, I don't want to go into security guards. Again, we pay cash all over the place. If you can create such a structure, then you can gradually pull the informal sector. But it's easier to just tax the ones you can see on the database. So I guess we keep doing that. Anyway, the strategy is to boost revenue by hopefully by widening the tax net and become more efficient using technology and so on to gather more revenue. Once you can do that, then debt doesn't become a problem. Like I said, for now, that's probably the biggest risk that Nigeria has. With respect to I think we know the story. We know the story as far as the FX reforms are concerned, and I think we're also familiar with the results. We are seeing portfolio. The official parallel rates have converged. Portfolio investment is capital is coming back into the country. There's more access to foreign exchange, which is making the entire economy stable. Investor confidence has improved as a result of the reforms. I'm not going to go into details. I think we understand how successful those reforms have been as far as FX is concerned. But it's important to emphasize that I believe that Nigeria's FX liberalization, to me, represents more of a structural reset. It's not really just a one-off shock. So that answers that question. The initial sharp depreciation that we all experienced following when the reform was initially introduced was really as a result of pent-up FX demand backlog clearance and speculative position. All of that, I think, has been removed. And the question is, as long as we keep maintaining a transparent regime, FX regime, using a single window. When in the past, we're not favoring certain people to give them FX. That's what was happening before. Giving FX at a very low rate to compare to the parallel markets to friends and family, as opposed to um, genuine business. Once we stop all that, capital is coming in, and FX liquidity is improving. And I think the payoff from the FX reform is now clearly visible in the external sector. Total trade um, um, it has gone up significantly. And for the first time in many years, our trade, we posted a trade surplus as opposed to a trade balance. I've discussed capital inflows and the impact of all this on capital inflows and how it's coming. The only challenge here is foreign direct investment, which is still struggling. But again, in a reform process, foreign direct investment comes in last. So the capital inflows are coming in, but FDI is still coming in very slowly. I think the reasons are obvious. Some of the binding constraints that are still being fixed are still being worked on, and people are still testing whether or not this reforms are sustainable. And that's why if you keep faith with those reforms long enough, then gradually you see the FDI also coming into the country. I think I will summarize the structural reforms. Now go to the last part of the last section of my slides. I'll summarize the details of structural reforms in the interest of time, and I think I've touched on each of them earlier slides. I think Nigeria's structural reform agenda rests on three pillars. One, productivity reforms, market reforms, and price reforms. On productivity reforms, investment in the digital economy, spanning financial technology, e-government, digital infrastructure, is already improving efficiency and expanding financial inclusion. Infrastructure modernization, particularly in transport corridors, power transmission, broadband, logistic platforms, also addressing some of the binding constraints to industrialization and services growth. On market reforms, FX liberalization, which I've already discussed, shifted Nigeria decisively towards a market-determined exchange rate regime, which is restoring transparency and credibility, while also supporting capital inflows. And at the same time, trade facilitation reforms are gradually strengthening Nigeria's integration into regional and global value chain, especially the AFCFTA. And finally, price reforms, the fuel subsidy removal, a more market-based energy pricing system. They're all correcting long-standing distortions, improving supply reliability and freeing up fiscal space. So I will skip the details and just go to the final section, where I would like to discuss very quickly the strategic opportunities under the AFCFTA. I assume that we are all familiar with what the AFCFTA is all about, trying to bring the 54 African countries, member countries under one room, unlocking a 1.3 billion people and a GDP of over 3.5 trillion. But when you look at Nigeria's, and the objective is to increase intra-African trade, which I mentioned earlier. But when you look at Nigeria's position as far as intra-African trade, it's actually quite low. Only 11% of Nigeria's total exports is within the continent. So the objective of Nigeria in that agreement is to expand that significantly and take advantage of its size, its positioning to actually rapidly grow intra-African trade. You can see many other countries that do a lot better than Nigeria as far as intra-African trade is concerned. Nigeria is over 50% of ECOWAS, for example, but intra-ECOWAS trade is also it's about 30%. So there's a huge space for growth. So here I will try to just quickly, and I think this is the part that would interest many of you in the room, investors. And the idea here is to highlight the priority sectors where I think UK investors can take advantage of the AFCFTA, of Nigeria in relation with the AFCFTA. The first priority sector is agriculture and agribusiness, and this will be my last slide before the conclusion. I'm sending him a signal to give me 5 more minutes because he's been inching closer. over the last, it's a skill I learned when I was Taisha General to measure little steps and calculate. It's getting close. So I said I was calculating each step. So a few more steps, it will take him about 3 minutes to finally get to the stage. So I had to quickly let him know that, give me 2 more minutes ahead of that. So agriculture and agribusiness, I think agriculture remains Nigeria's most inclusive growth sector. It employs majority of the population and serves as a cornerstone for food security, not just for Nigeria, but for the continent as a whole, as well as export diversification. And recent reforms, such as the gradual replacement of blanket fertilizer subsidies with a more market-based system, as well as expanded access to agricultural credit, is creating the right incentives across that value chain. And Nigeria's strength here doesn't only lie in primary production, but in agro-processing and value addition. Nigeria produces cocoa, cassava, oil, palm, grains, oil seeds, all at scale, but exports much of it in raw form. So processing this input into high-value products, chocolate, ethanol, starch, cooking oil, and so on, offers huge dividends. And when you take into consideration the fact that Africa imports over 50 billion worth of food annually, is a huge opportunity for Nigeria to, from outside Africa, by the way. Now imagine if Nigeria can provide half of that within the continent. You don't have to. It also helps with the environment, the emissions challenge that the world is happening. Because if you don't have to send your goods to Asia or to Europe, the transportation cost and the emissions are less because you are just sending it across the road for you. So there are significant benefits from trading more with ourselves. The second priority sector is manufacturing industrial production. It's still relatively shallow, but it has been improving. But this, with the policy, it's been improving, but with the improving policy and the improving environment, given the reforms, there's huge opportunity for this to grow significantly. We already possess strong strong cement manufacturing base, Dangote, from Dangote, of course. And we already export a lot of our manufacturing exports to ECOWAS and some parts of Central Africa. Also, as many of you know, that we have the special economic zones, such as the Lekki Free Trade Zone, that provides tax incentives and infrastructure that lower entry barriers for manufacturers. So there's huge opportunity in that space. Third sector is services, especially finance, technology, and the creative economy. I think the services sector, to me, represents Nigeria's fastest scaling AFCFT opportunity and where its biggest competitive advantage lies. Financial services already contribute roughly 6% of Nigeria's GDP, with many Nigerian banks and fintech firms expanding across Africa. And as exchange rate stability improves and macro risk recede, I believe financial institutions are better positioned to support long-term investment through credit expansion and capital market activity. Technology-enabled services, financial technology, payments to e-commerce, logistics, huge benefit given Nigeria's huge young and tech-savvy population. Of course, Nollywood, the entertainment sector, the creative economy, increasingly important export sector. Nollywood alone generated over $7 billion annually, and it has significant growth potential driven by rising Pan-African interest and distribution, global streaming platforms, and rising content investment. Of course, tourism and hospitality, again, significantly underdeveloped, but huge untapped potential. I'm guessing half of the people in this room are subscribers to Dirty December, for example. That's a huge opportunity untapped in Nigeria. The fourth and final priority sector, energy, chemicals, and industrial inputs. Is the fourth priority sector that can benefit from the EFCFTA. As a result of the energy reforms, the Dangote refinery has opened up a whole spectrum of different opportunities as far as that sector is concerned, and it's still early days. Also gas, the supported by a decade of gas agenda also offers parallel opportunities in gas processing, power generation, LNG exports, fertilizer production. So huge opportunities sectors. So the so what's the role of the UK and UK business? All of this. First, the UK Nigeria Enhanced Trade and Investment Partnership signed in 2024 provides a structured platform deepening cooperation across goods services. Nigeria's market access, like a regional influence and global influence under the ASCOT, position it as a natural hub for UK firms. Of course, the Nigeria diaspora, which I mentioned, they play a central role in this partnership. Remittances from the UK has always provided stable counter-cyclical FX inflow. Diaspora bonds introduced by Nigerian government by Nigeria also offer long-term or non-volatile financing for investors. And also, there's also an opportunity to, it's not just investing in bonds alone that we're talking about. It's also directly investing in Nigerian businesses operating in the country. And there are lots of success stories already, how this has worked, even when reforms were not in place. Unilever, Guinness, they have all been operating in Nigeria for years. Even UK-based private equity firms have invested in Nigerian firms. For example, Actis in power and real estate and TLG Capital. So there are huge examples of UK-Nigerian business relations that have worked. It can only increase and be enhanced as these reforms take shape. That's not to say there are no risks. I think we are familiar with the risk. There are several risks. Macro risk, because till today, Nigeria is still vulnerable, even though it's improved, vulnerable to oil prices, oil price shocks. I think we all know that. There's also policy execution risk, like I mentioned, as the elections draw closer. And of course, there are the structural constraints that still exist, the infrastructure challenges that Nigeria still faces, are all risks that Nigeria has to. So I'll go to in conclusion, I'll close with 4 key points for my presentation. First, Nigeria outlook is very bright. All the macroeconomic indicators are pointing to sustained strong performance in Nigerian economy, which creates huge opportunities as far as investments are concerned. Macroeconomic fundamentals have been reset, stability has been restored across almost all the macroeconomic indicators. Second, reform credibility is rebuilding, as difficult as they are, but they have been implemented, and I expect that to be sustained. Third, the AFCFTA significantly amplifies Nigeria's scale advantage, positioning it as a regional production, logistics, and services hub. And fourth, the UK and the Nigerian diaspora are central to translating reforms into sustained growth by providing the capital, skills, and market access that is needed. So Nigeria has moved from shock to balance. Stabilization has largely been secured. Reforms are gaining traction. So a very meaningful opportunity window, as far as I'm concerned, that opened up for investors in 2026 and beyond. And the key is getting there early. The key is early, but a well-strategic entry into Nigeria. Thank you very much. I look forward to taking your questions.
Thank you very much, Dr. Kale. Honestly, I think as the former chief statistician and the MD for research and intelligence, I think clearly, we didn't give him enough time to do justice to that paper. And I think it was an excellent data-driven paper. So thank you very much. We're quickly going to go into quick question and answers. We've got 2 members of the IOD committee. We've only got 5 minutes for questions. So I'm going to use the mic privilege. Please introduce yourself. Quick. He's been on his feet for a while now. Thing is that He's very good at standing because you didn't make eye contact until when he was ready. Very good.
Issue. Thank you, Dr. Kale. My name is Clementine Wallop. I work for Horizon Engage. We do political risk analysis for energy companies. Obviously seeing some very positive cues from the energy sector now in Nigeria. How can we translate better these regulatory changes we're seeing on paper into improved execution and implementation, which, as we know, has been wahala for a long time?
Should I answer or take several questions? Okay. Should I answer the question or should I take several
I think
questions first?
take all the questions together so we can move. Okay. Chair.
Thank you so much. I have just one brief question. More often than not, in instances like these, we talk more about how government can get more revenue, and we advise investors or the people on why they should pay their taxes. Do we attempt to tell the government on how they should spend wisely? Thank you.
Okay.
Any more questions? Over there. The lady there. Yeah. No. There, yes.
Yes, thank you very much. I had a question around the services.
Please introduce yourself.
My name is Hannah Oyewole. I'm CEO of Young Ladies Club. I had a question around the services. You spoke about manufacturing cement tiles. I wanted to find out more about the investment of properties and also the building of properties as well in Nigeria. Thank you.
2 more questions. Over there, yes.
Good morning, everyone. Thank you, Dr. Kale, for a very wonderful presentation. My question will be, my name is Kazim Ogumambi. I work for the Access Bank UK Limited. And my question will center around, we've seen the positive trajectory of the macroeconomic fundamentals, which speaks very good to the growth we could expect in decades to come. But how do we then tie that into the microeconomic indices? Because mostly you look at, when we hear maybe analysis, people will say, does it put food on my table? We said, we have this growth trajectory, the FX, the subsidy removal, FX unification, and all of that. But we need to, if that there's the disconnect between the macro and the microeconomic indices, then the common man cannot really feel that impact of growth. How then do we then, what are those policy direction changes that can then be implemented that will then improve that microeconomic indices? Thank you.
2 more questions.
Hi, good morning, and hello, Dr. Kale.
Please introduce yourself.
My name is Shobukola Kokar. I run an accounting and business advisory firm in the UK, and previously used to work in investment banking. It's more a statement than a question, but I think well done on what you've done. I think I would like to say it would be great for me to put some of those things on some of the WhatsApp, Nigerian WhatsApp groups that I'm on to let people know all the good things that are happening that they may not be aware of. One of the key things that from my business perspective that we noted was in late 2025, early 2026, Nigeria was removed from the high-risk countries list from an AML and counter-terrorism financing list in the UK. I'm not sure many people are aware of this. From our business perspective, I have a small firm also in Nigeria where I hire accountants.
Your question.
The point that I want to make is, from a services perspective, how do we encourage Nigeria or Nigerians to increase servicing for professionals in Nigeria?
Thank you. Last question. Had enough on this side, so.
Thank you very much, Dr. Kale. My name is Francisco da Silva, CEO of ESG Management Services. We provide ESG advisory infrastructure systems across Africa. My question is more centered around Afrexim, and specifically you can tailor that to Nigeria ecosystem. How does Afrexim currently quantify ESG transition risk in its portfolio for capital allocation. I know you talked about that earlier, and pricing decisions. And where do you see the biggest gaps? And I mean, in reference to having a standardized Africa-specific risk and compliance ESG investment readiness scoring tool. Because part of the capital flow around ESG, I think one of the challenges is unlocking available capital to Africa, which currently is at 2%. And how do we get round to that, having a standardized compliance process around that? Thank you.
Thank you very much. Sorry, we can't take any more questions, but I'm sure Dr. Kale is
Okay,
around.
I'll try to answer. I hope I remember all the questions. But I will try.
I was wondering.
I will try to remember as much as I can. I mean, I'm having kind of nostalgic feelings here because I had to remind myself I was no longer in government. The questions, but ironically, my friends tell me I'm more pro-government since I left government. I was actually more critical of government when I was there, but now I seem to be, maybe I can see things clearer now that I'm not in government. I think the first two questions, translating energy reforms to ensuring that the wahala stops. I think it's a process. I think that's what I tried to say in my presentation, that the first steps, getting the policies right, have been done. The next stage is now ensuring implementation consistently of what the policy says. We also have situations where policies in Nigeria, that's not actually never been our problem. It's never been introducing the policies and saying the right things. Always have been execution, and execution is tied to the qualities of those you have that are going to be responsible for that execution, which is the public servants. And there's usually a gap and a lack of understanding between what the policy says and what those that are meant to implement the policy can do, or sometimes don't want to do. We have to be honest. It's not just a lack of knowledge; it's actually deliberate obstruction. Because when you build a system that's is benefiting certain people, there's going to be a resistance. So I think this is more of a government enforcing the rules. I think there's a lot more attention on Nigeria. People are not just looking at the introduction of the policies; they're looking at the outcome of those policies. So at the end of the day, if the numbers don't start to change, then it becomes evident that the policies are not being executed properly. So I think it's for government to monitor those and evaluate those indicators, those targets, and to ensure that otherwise, it's not. You're right. It's really not going to. But I think I'm prepared to give the government the benefit of the doubt, because so far all the right steps that get to be taken have been taken, and especially in other sectors where reforms were introduced. There was discipline, there was execution, and everything seemed to work. And I just so there's what's that word be like? Political will to ensure it happens. So I think that will gradually translate to the energy sector, but it's probably going to take a bit longer than others. In terms of the question about the micro, I think I remember. I'm not sure if there's a second or third question. The macro translating to the micro. I think the macro is an aggregation of the micro, and if people are not feeling that the micro is usually one problem, and that is distribution of income. So he's saying that 90%, maybe 90% of those benefiting from the growth or the reforms are restricted to a particular few people. The question is ensuring that it spreads better. And that's where government comes in. Government's job in that space is to now redistribute income. So if it's not translating to food on the table, but on the macro level, it is there and the numbers are correct, I have to add that as well, then it is a redistribution problem. And in countries where it works, government will have a system where they distribute money from the wealthy, from those that are holding all the resources, and translate it to those on the micro. A way to do that, for example, when I was at KPMG at the time, when I advised that when they're going to increase the subsidy, when they're going to remove the subsidy, it's going to spike prices. And they were talking about, and I said it's going to hit the poor. So you look at things like transport vouchers they are giving to the poor. So as well, you take money from maybe tax those that have the resources more. That extra resource, you now put it into things that benefit the man on the street. If government doesn't do that, if there's no proper effective mechanism of redistributing income where the inequality is narrowed, then yes, you keep growing, the economy keep growing, the growth is real, but it will not translate into the micro. I think that's where the disconnect is. There was a study that said the average mind can only remember 2 or 3 questions at a time. I think I've done 2. Can you remind me?
Well, totally. You done very well. Please feel free. I think you'll stay with us, aren't you? So please feel free to connect with him after. But we need to move very swiftly on because we have other exciting people who would like to talk to us. So without further ado, I want to invite another goodwill message from our frenemies, if we can call them that. You know, it's Nigeria, Ghana. We are friends, really, but we're also enemies when it comes to football and other things, particularly jollof. Who said jollof rice? Okay, so a quick goodwill message from Mr. I don't know if it's Alaji, Mauto Alifo, who's the head of Chancery, on behalf of His Excellency, the High Commissioner. Thank you.
Good afternoon, distinguished ladies and gentlemen. There is something we in Ghana learned from our big brothers, the Nigerians. I want to stand on existing protocols. My head of mission is out of jurisdiction, but I just saw my deputy head of mission just arrived. If I had seen him earlier, oh, sorry, I would have maybe given him the opportunity to speak. I was given just one mandate, a very simple one, that I should give a solidarity message. I shouldn't spark jollof war. I shouldn't spark football war, but I was provoked by my, by my previous speaker. I want to, on this note, thank the organizers, the Nigerian-British Chamber of Commerce and the IOD for making it possible for us to meet today. And the previous speaker did very well. I learned so much from the figures. The figures are very good. And we know it for a fact that if we Africans get it right at the economic front, we would not be on the table, we'll be around the table in global financial and market space. And I was also asked to acknowledge the fact that Nigeria is a big powerhouse, economic powerhouse in Africa and in West Africa. And long before the advent of the Europeans in our part of the world, our people were trading among themselves. You go to some parts of Ghana, you see Sabonjida, that is market, which is Hausa language. Every part of West Africa, it is a familiar language. Our people from the Volta region in Ghana migrated from parts of Nigeria. The people of Accra migrated, the capital city of Ghana migrated from Nigeria. That is why we must come together and do business. Long after independence, our leaders have been friends and they had collaborated in regional integration. And we in London, every time there is an event, our colleagues in the Nigerian High Commission assist us. We also collaborate together with the African Group of Ambassadors inland in here to promote Africa. There was a question that I answered recently, which I want to put here. When you take the ECOWAS market of about 400 million people, and you decide to do business in this region, starting with Nigeria alone, with over 200 million, if you can make a profit of £1 per product, that is 200 million pounds in Nigeria alone. And then you go to the ECOWAS region, 400 million. I know you want to do that business. Our leaders have put the AFCTA in place. We are at the implementation level. It should be about Africa. It should be about Nigeria. It should be about each African country working collaboratively to improve life for our people. On that note, I thank you for this attention.
Right, you can probably see me going back and forth. It's time pressure, and that's what happens when you do this job. Nobody wants to do it, but when you do it, they hammer you on the head. So look at my head, it's being hammered at the moment for time. So we have to move quickly on to the next keynote speaker who will be joining us online. The speaker is Ms. Razia Khan, who is the head of research and the chief economist for Africa and Middle East for Standard Chartered Bank. Is she ready? I know we're pushed for
ready,
time.
And
yes.
I hope you can hear me. Good afternoon, everyone. Dr. Carla has been through so much of the economic backdrop. I wonder what I have left to say. So I'm going to give you a very super quick presentation to answer this question. We've all observed in the last week that the Naira has gone from strength to strength. Inflows into Nigeria are considerable. Hopefully, by the end of this presentation, we'll be able to answer the question, is this Naira strength going to persist? Could the Naira even appreciate further? And what does this mean for investor returns? So without further ado, let's take a look at the global context setting for what is going on in Nigeria. First of all, global growth. We know from our own forecasts, the IMF and others, everyone's expectation is more or less flat growth in 2026 relative to the levels that we saw last year. Everyone had thought a lot of trade-related tensions and volatility in 2025. The surprising feature was that so many trading partners of the US were accelerating their exports to the US ahead of tariffs taking effect, that global growth actually held up. In 2026, we see global growth holding up as well, but for different reasons. A lot of this will have to do with the fiscal stimulus that is being envisaged in different core economies. But we say this with a hint of some caution, because if you look at the index of economic uncertainty and look here at the traditional relationship between global growth and that economic uncertainty index, we know that whenever economic uncertainty has been heightened, global growth has tended to suffer. The index is pointing to very, very elevated levels in the recent past. So it's a cautious approach, anticipating that global growth will somehow, despite all of this, still hold steady. Now, what does all of this mean for Africa? I'm going to do a bit of regional context setting as well. Traditionally, whenever global growth has performed less well, we've seen African growth suffer. And this time, we think is going to be different. Our forecast suggests that African growth is actually going to be increasing in 2026, notwithstanding the rather flat trajectory for the whole global economy. And the reasons for this are clear. It's not so much to do with what's going on globally, the traditional correlation with commodity prices, African economies being hit hard with a lag, but being hit hard when the global economy slows. The reason for this is we are seeing important reform impetus in economies like Nigeria, more so than many other African countries. And this, we think, is going to be lifting growth prospects overall in the region. So if we look at the numbers and how they stack up, Nigeria's recent rebasing of GDP lifted the Naira measurement of GDP about 35%. But we also know that because of the correction in the value of the Naira, that steep depreciation that came with necessary reforms in 2023 and 2024, Nigeria has fallen behind in the overall ranking. This doesn't matter. The only thing that does matter is the growth prospects ahead, and it's looking very positive. It's looking very healthy for Nigeria. A question we keep getting asked is, well, trade tensions. We know that AGOA has been signed into law with effect to the end of this year. Is it going to make a difference to African countries' prospects? The US as a trading partner, both for Africa and for Nigeria, has fallen far behind. And this has to do with the fact that the US has seen increasing energy self-sufficiency. It's the rise of shale oil in particular that has seen declining export volumes from West Africa, from Nigeria to the US. And so, yes, trade tensions are here. Trade tensions are still somewhat elevated, but it's going to be the performance of the more important trading partners that ultimately matters for economies like Nigeria. So, with all of this in the backdrop for the global context, the big question is, are we going to continue to see strong investor appetite for Nigerian government securities, for other Nigerian investments, everything that has driven the Naira stronger in the recent past? We know that at times of heightened global economic uncertainty, investor risk appetite tends to recede. And it's fair to say that that hasn't been the case year to date. In the last week, we've seen metals price volatility. We've seen the sell-off related to concerns around the level of AI investment, whether the returns are ultimately going to be there. We've seen the big correction in crypto markets. But on the whole, we've seen consistently strong investor appetite for markets like Nigeria. And the question is, what are the drivers of this? Will it be long-lasting? So one view is, well, the dollar remains supported despite the weakening in 2025 by the fact that productivity growth and growth in the US continues to be higher than that of other developed markets. And this is something we need to keep in the back of our minds, because it's unusual to see this level of pronounced dollar weakness. At Standard Chartered, we have something of a non-consensus view, thinking expectations of more and more dollar weakening are probably overdone. And if we should see any risk event that leads to much higher US Treasury yields, other things being equal, that could lend support to the US dollar. But let's look more closely at how African economies have been performing. 2025 was a notable year for currency performance. Sure, there were the likes of Ethiopia, the embrace of FX liberalization. This typically means some degree of depreciation. But we saw other economies, the Ghana cedi, for example, its currency gaining because of gold price gains. Copper prices doing well, the Zambian kwacha benefiting. And even though it looked somewhat less pronounced on this chart, the Nigerian Naira not only stabilized further over the course of 2025, but it did strengthen. And more importantly, that strengthening has continued into 2026 as well. One of the results of this is that we see a much healthier level of foreign exchange reserves in Nigeria. The scale of recent inflows has allowed the CBN to buy dollars on the market, actually building foreign exchange reserves further. Over the course of 2026, we think inflation conditions are changing, and markedly so in economies like Nigeria. Up until now, investors have flocked to frontier markets because in nominal terms, they offered these super high yields. Now there's going to be an opportunity to cut interest rates, given that inflation is trending down. Our expectation is that markets like Nigeria, Ghana too recently had 3.8% inflation. Zambia, all of these countries will be able to cut interest rates meaningfully, and Nigeria perhaps more so than most. The encouraging feature is that investors are now turning away from just the high yield story to seeking duration. There is a belief that maybe this will encourage flows into federal government of Nigeria bonds. It's not just the short-term returns at the very front end of the curve that investors are concerned with. So long as there is this belief that the currency will keep on strengthening, we think global conditions are still conducive to inflows into markets like Nigeria. An important point to note, because some of the reporting on this globally, we think, has got it quite wrong recently, is the level of China's engagement across Africa as a whole. And yes, it's true, if we look at the numbers, China's overall lending to Africa has probably surged some time back. The peak, if we exclude Angola, came as early as 2013. And it's also true, if we were to have included the 2024 data, that we probably saw a halving of 2023 levels, according to the Boston University study, maybe about $2 billion worth of lending. But we think what has happened in 2025 and what has yet to be announced is much more meaningful. Bottom line, China is not disengaging from the region, and China-Nigeria engagement remains very strong as well. We are seeing a diversification of the partners that China is looking at in the region. And Nigeria, with its population size, with the scale that it represents, with its growth prospects, continues to be an important beneficiary of this China interest. We think that could be an additional factor supporting growth going forward. So moving on to the Nigeria outlook, I promised you a super quick presentation, and I hope I'm delivering on that. Growth forecasts, first of all. When we formulated these forecasts based on the expectation of continued improvement, this is Nigeria's chance to really build on the reform momentum of the past. We didn't expect that even with our 4% growth forecast, we would probably be lagging the consensus. Even the IMF is forecasting faster growth of around 4.4%. Now, these growth forecasts need to be put in perspective. They are growth forecasts that come after that significant rebasing of Nigeria's economy. The inflation forecasts don't pay too much attention. NBS's recent rebasing, changing the methodology of the base year used in 2024, means that inflation is likely to come down a lot faster. And that, we think, solidifies the case for interest rate easing, and this will help boost loan growth. This will come as significant reprieve to the Nigerian economy, where because of the necessity of FX reforms, monetary policy has needed to have been so tight all along. We also have similarly post-rebasing data on debt to GDP, and debt service to revenue. Now, Dr. Kale has already alluded to this. Nigeria's debt to GDP ratios remain very modest relative to many regional peers. It's the debt service to revenue, which had been so elevated, that was very worrying. But the good news is the next leg of reforms that the Nigerian government is looking at, and to be fair, this is done in full sight of the political cycle. Elections coming up, we're still seeing reform momentum being given the green light. It is all systems go with reform. The next crucial leg of fundamental reforms Nigeria could see will be around revenue collection, formalizing the informal economy with all the scope for gain that that represents. So I've already touched on the growth picture, but this chart gives you a closer look at precisely what was driving growth in the recent past. And you'll see that agriculture has had something of a mixed contribution, contributing negatively to growth in Q1 2024, not really contributing all that much in Q1 2025. If that sector alone can turn around, then Nigeria is indeed in sight of much faster growth. We know that part of the recent good news has been the pickup in oil production from very low levels, it has to be said. And yes, we do face great uncertainty with oil markets, but all that matters for the real GDP calculation is whether Nigeria can consistently, steadily raise the level of oil output. And encouragingly, if you look at the very last chart on this slide, if you look at the PMIs for different sectors, they do point to the likelihood of stronger growth ahead. The big story in Nigeria this year, we think, is going to be inflation as a consequence of the very necessary fuel subsidy reforms, as a consequence of the FX reforms. Inflation had gone to very high levels. These are post-rebasing data, and it's the rebased base from 2024 as well. And you can see that across a number of categories, but crucially across food inflation, there has been a process of improvement. There's been significant disinflation. We think this continues. We think it allows the CBN to cut interest rate policy very much more significantly. Investors will stay involved for the duration gains, and things are looking very positive for Nigeria. One of the most positive aspects of all of this has been the improvement in external metrics. Now, I've often said the embrace of FX liberalization that we saw under President Tinubu meant that Nigeria has finally left behind the shackles of an FX policy that kept it constrained to being only an oil-producing economy. Now, for the first time in the country's history, post-independence history, the FX rate is free to find a level. Yes, there may be smoothing of market volatility, but there isn't much more than that going on. And this means very critically that Nigeria, the Nigeria of the future, does not need to depend on oil alone. We know that currently the external balances, the current account surplus, looks to be at a healthy level. We know that part of this is oil exports. We know it's also the moderation in import demand as a consequence of the Naira's weakness. And policymakers will have to be careful about how this is managed going forward. If the Naira strengthens, does all of that import demand come roaring back? For the moment, the expectation is, with healthy inflows, with portfolio investor interest hopefully leading to greater foreign direct investment, Nigeria's external balances are in much better shape. So the question I put to you at the outset, this has been a week of significant Naira gains on the interbank market. We've gone right through 1400. Is the good news going to continue? As ever, it's a feature of what's going on with the global economy. But the message I'd like to leave you with is that so long as the reform momentum remains strong, Nigeria has a very, very good chance of seeing sustained inflows, sustained appreciation of the Naira, hopefully a sustainably lower inflation rate, creating the foundation for lower interest rates and a banking sector that is much better primed to deliver on growth. That ends the formal comments of my presentation, and I thank everyone for your time. I know it is Friday. I know that you are up against a deadline, and I hope that suffices. Thank you so much.
We're a bit pushed for time. And what I would want to suggest, with your kind permission, Ms. Razia Khan, on the back of an excellent presentation, is that if you're staying with us, maybe we can pick up some questions at the end if people do have questions. So thank you very much once again for that excellent presentation. And without further ado, because we have a few more goodwill messages, I'd like to invite the representative of His Excellency, the High Commissioner of Algeria to the United Kingdom, Mr. Abdinor Gugam. I hope I pronounced that properly. Please, 1 minute. Thank you.
Good afternoon. Thank you for this, for giving me this opportunity. Ladies and gentlemen, excellencies, distinguished guests, it gives me great pleasure to address you today on behalf of His Excellency, the Ambassador of Algeria to the United Kingdom, on this occasion of this forum devoted to the Nigeria-United Kingdom Economic Outlook 2026, organized by the Nigerian-British Chamber of Commerce in partnership with the Institute of Directors of Africa, for Africa. His Excellency has asked me to convey to you his warmest greeting as well as his sincere thanks to the organizers of this event for the kind invitation extended to him. Owing to scheduling constraint, he was unable to be present, but he wished to be associated with this major event to my voice. Ladies and gentlemen, excellencies, distinguished guests, we are meeting at the pivotal moment as the global economy is undergoing profound transformation that call for strong partnership built on trust, complementarity, and long-term strategic vision. The partnership with Nigeria and the United Kingdom today constitute an important pillar of Afro-international economic relations. It is founded on solid basis, a forward-looking vision, and growing recognition of Africa's strategic role in global economic stability and growth. In this context, Algeria attaches particular importance to strengthening its strategic cooperation with the Federal Republic of Nigeria, a brotherly nation and a major actor of the African continent. Our two countries share a convergence of view on key African priority, notably in the areas of energy, security, industrial development, and economic sovereignty. Algeria-Nigeria cooperation in the field of energy, driven by structural projects of continental scope, illustrate our shared commitment to promoting sustainable energy security, and essential factor for stability, growth, and industrialization in Africa. It also reflects our firm belief that African solution grounded in solidarity and regional integration lie at the heart of continent's future. As leading energy producing country and committed actor in regional economic integration, Algeria places particular importance on energy security and the development of constructive partnerships across the African continent. In this regard, we believe that energy cooperation between our country and Nigeria, notably through large-scale projects such as Trans-Saharan gas pipeline, represents a concrete example of beneficial synergy for local development, energy security, and sustainable economic growth. This project, which aims to connect Nigeria's gas resources to Algeria gas pipeline hub via Niger with an export capacity to Europe of 30 billion cubic meters per year, stands as a strong symbol of regional integration and constructive African partnership. Thanks to its strategic geographical position and its capability in natural gas and clean energy, Algeria aspires to play a central role in energy connectivity between Africa, the Mediterranean basin, and Europe. Furthermore, Algeria confirmed its unwavering commitment to the African Continental Free Trade Area, which we consider a strategic lever for trade diversification, industrial development, the creation of African value chain, and the strengthening in intra-African economic integration. The effort undertaken by our two countries in this framework constitute a major contribution to this continental dynamic. Finally, our country wishes to emphasize that cooperation between Algeria, Nigeria, an African country, and the United Kingdom should not be limited solely to trade indicator. It should also be viewed as a bridge of partnership, knowledge sharing, and share strategic vision in the service of a more integrated, more resilient Africa, fully engaged in the global economy. Thank you for your kind attention.
Thank you very much, Your Excellency. It's beginning to feel like AFCON, isn't it? It feels like that's football for those who don't know what AFCON is. That's African Cup of Nations. Right, so moving swiftly on, thank you very much for that, Your Excellency. So time is of the essence. So let me just give you a quick breakdown on where we are so that the next set of speakers are well informed. We're supposed to be starting this session at 11:33. Please, what's the time? Aha, it's 12:31. But when you were networking for 30 minutes, you enjoyed it, didn't you? That wasn't in the schedule, so it's your fault. Just joking. We'll do our best to bring everything in on time. I mean, we were hoping to have finished by 1 o'clock, but we have a hard stop for 1:30. And I think it's important to make time for the discussion panel because I think it's going to be very exciting. But we have a presentation to be made by Mr. Rob Lally on behalf of the UK Department of Business and Trade, who's got 10 minutes to just dazzle us as he always does, and then we'll take all the Q&A at the back end. Thank you, sir.
Saved you a second. Excellencies, ladies and gentlemen, good afternoon. I'm very grateful to the Nigerian-British Chamber of Commerce for allowing me to speak today. Please do not underestimate the importance for those who are advising ministers of hearing directly from you, analysts, commentators, businesses. Policy is not created in an ivory tower in a vacuum. So to have this opportunity to hear your questions, hear your views, is hugely important to me. And that's why I will keep my speech nice and short for you to allow for questions and comments. So my name is Robert Lally. I head the Africa team in the Department for Business and Trade in a building about 30 seconds walk from here. I've been doing the job for about 6 years. Before that, I was working for a major UK energy company, which is well known to Nigeria. And before that, I was working overseas, leading British Embassy trade and economic teams in South Korea and also in Vietnam. So I've had a very enjoyable 35-year career, but actually what I'm doing now with African nations is especially fruitful for me personally, but also hopefully for the results we are getting. Also want to introduce my colleague, Angela Mburu, who's at the back. Angela leads on West Africa, specifically and especially Nigeria, but I know we've got people from Ghana here, so I can't just be all about Nigeria. And I promise you, I'm going to talk about the here and now. I'm not going to talk about potential. It is about the here and now. It is about the UK government's growth agenda and how we get things happening right now. Before getting specifically into UK-Nigeria work and the Enhanced Trade and Investment Partnership, I wanted to draw your attention to two really important documents that were published last year. Apologies if they've already been raised this morning. They set out where the Department for Business especially is going to be putting resource and what the overall direction of policy travel is. One is an industrial strategy. This was published last summer. This is a whole of government document. And it focuses very much on the UK's strength, but also where global opportunities are. It's a 10-year plan, and it's all about stability. It's about openness. It's each of them looking across the piece, whether we're talking about skills, whether we're talking about regulatory environment, whether we're talking about international opportunities. It's meant to be comprehensive and focused and targeted. And the sectors in that strategy, and these do align a lot with the sort of sectors we've been talking about already, are advanced energy, advanced manufacturing, clean energy, creative industries, touch on that a bit more later, defense, digital and tech, financial services, life sciences, and finally, professional and business services. So I think each one of those is very much aligned with what we're already talking about in relation to UK-Nigeria trade. Secondly, we also published last year a trade strategy, which is all about supporting British business abroad and ensuring security of supply here in the UK. Obviously, that strategy does focus a lot on markets like China, US, EU, but it also does talk about, how we as the UK want to be the most connected nation in the world. We know about the strength, for instance, of the financial services sector, not just London and the UK. I'm paid to do a UK job, so I can't just say it's about London, but obviously London is particularly strong. We also know as the UK, as part of the Commonwealth, close to the EU, the English language, the law in England as well. We've got so many strengths where we can work together to actually build greater partnerships. And it's not about focusing just on FTAs. I think when the UK left the European Union, there was very much a focus on free trade agreements. We want to be much more nimble. We want to be much more flexible. And if that means we don't do full FTAs, then so be it. If we do a services agreement here, a digital agreement there, so be it. We have to chase for us where the value is for the UK and where the partnership is with the other country as well. So it is about growth, it is about prosperity, it is about high quality jobs, all things I'm sure Nigerian officials and Nigerian ministers would say. So the agenda is shared. But it is also about prioritization. And I will be blunt with you, certainly in the UK and I'm sure in China. I mean, one of the questions was, how do we ensure that government spends its money wisely? Absolutely, great question. But you're absolutely right. It is resource is always finite. It's an obvious thing to say, but my job is to get the best out of scarce government resource. So Nigeria, first of all. Overall trade with the UK, £8.1 billion, up 11%. They're the most recent figures, so great trajectory. 5.7 billion are UK exports, so unusual for the UK to export more than we import. And as of last year, I believe, Nigeria became the largest export market for the UK in Africa, beating your good friends, the South Africans. So for that alone, I thank Nigeria. So is anyone from the South African High Commission here? But as for the Enhanced Trade and Investment Partnership, for us, when we left the European Union, we rolled over a number of continuity agreements, including a number in Africa. We had a gap with Nigeria, and it felt that it was an absolute essential thing for us to do as the UK, is to develop a new partnership, a new platform for the UK government's work with the Nigerian government. Unfortunately for us, we found a very willing partner, and this is the key word for me throughout all of this, partnership. Very willing partner in the Nigerian government to do something together and start moving forward with a new relationship for the 21st century. So the questions I'm always asking are, how far can we go together? How fast can we go together? And these are always quite tricky. I know government will always be accused of going slowly, but that's your job to push me. And I'm not just saying, because this is a Nigeria session, next week I'll do one on Angola, and I'll say lots of lovely things about Angola. But we're genuinely excited about working with Nigeria. I'm not going to go over all the facts and figures, that you people know better than me. But the long-term economic potential is beyond doubt, as well as what's going on at the moment. And the strategic opportunity is clear for the UK, reading across to our strategies in sectors like financial services, in fintech, technology in general, and the creative industries. I just want to flag two examples of work, of why we in the UK are looking at Nigeria and going, you know what, how far, how fast? Lagos, we know, is emerging as a global technology hub, and it was named the world's fastest growing tech ecosystem in 2025. So obviously we want to work with you on that. Creative industries, it's been touched on already a number of times, and it feels to us, I mean, Nollywood's been mentioned, but Afro beats, fashion. We had a great session in March last year on creative industries. The only issue I took away from it was there was 100 people in the room, and every one of them had 100 ideas of what I should do. So that's been quite tricky, but we need to boil it down into what we're going to do and how we're going to work together and make progress. And that brings me to the specifics of the Enhanced Trade and Investment Partnership, and I will just skim over this. You know, as mentioned, it was essential for us as the UK to work with Nigeria to fill that gap because we do not have a trade agreement, you know, with Nigeria. And what we've got as a platform in the Enhanced Trade and Investment Partnership are sectors where both the UK and Nigeria think it's important we work together. There's no point in Nigeria saying to us, we want to work on X if we're not interested, and vice versa. So a lot of work was done to make sure that these are areas that we want to work on together. And they fit very much with our industry strategy, UK's industry strategy sectors. So, you know, legal services, financial services, clean growth, energy, creative, etc. Also, export diversification. I mentioned that there is a trade gap between the UK and Nigeria, and we in the UK have what's called a developing country trading scheme. Well, I think, and please don't quote me on this if there's any press here, I think something like 99% of all exports from Nigeria come to the UK tariff-free. You know, it is hugely advantageous. We want to keep working with Nigeria because we know two-way trade is what leads to most results for both countries. Ultimately, what we do is shaped, you know, by you. It's by business. You know what we can do as government. You know we can inform business about what's going on, communicate. We can facilitate. We can convene. When there's barriers, we can talk to each other at government to government level to see how we can get a regulatory environment that is more conducive to two-way trade and investment. But ultimately, it's your views. It's what we hear from business that really matters. And that's why, you know, things like two-way visits, sessions like this are hugely important. I say in the time allowed, I'm not going to go into the detail of every work plan that we've got for each sector and activity within the Enhanced Trade and Investment Partnership. But needless to say, I'm very happy to take questions. I don't know if I'm on the panel or you know, afterwards. Angela and I will be around. It'll be a great dress rehearsal because on the 16th of March we have the first UK-Nigeria ministerial evaluating what we've achieved within the Enhanced Trade and Investment Partnership. So hugely important, not just for us as officials to talk about the progress we've made, but it's right that ministers and you challenge us and say, well, why aren't you doing this? Can you not do this faster? Can you not do this further? You know, I'm a grown man, I can have good conversations with you, and if we're not doing stuff in the way you want, we'll either do it better or I'll explain why we're doing it in the way we are doing. So how far, how fast, government role, they're the things we're thinking all the time. Thank you very much for your time.
Mr. Roblali, you're a star. Thank you for bringing it home, as so to speak. Thank you very much for that. And so I think you've all got the message there. How far, how fast, and what's the third one? What can government do? On that note, with the kind permission of the chair of the panel, I want to quickly bring Her Excellency, the High Commissioner for Zambia to the United Kingdom, to just quickly give us a goodwill address. Thank you. I forgot to tell her she was next, so please forgive me.
I was expecting to come in, I think, right towards the end. So thank you for the privilege. Chair, Excellencies, Honorable Members of Parliament, my namesake Florence, I didn't realize. Yes, I'm also a Florence. Distinguished ladies and gentlemen, it really is a privilege to join you this morning, or this afternoon now, to convey warm greetings from the government and people of the Republic of Zambia and the wider Southern Africa region in general, and those who are represented here. Allow me to commend the Nigerian-British Chamber of Commerce, the Institute of Directors Africa Group, and First Bank UK for convening this timely dialogue on Nigeria-UK economic prospects at the start of 2026. It gives us a lot of encouragement. It gives us also a lot of hope and keen interest to see how the UK is engaging with our brothers and sisters across the continent because that's an indication of, hopefully, relationships that will continue and traverse through our beloved continent. From Zambia's vantage point, Africa-UK cooperation must increasingly move from a transactional paradigm to one of long-term strategic partnership. The United Kingdom is not only a major bilateral partner, it's also an important source of investment, technology, and expertise for African economies seeking to diversify, industrialize, and create decent jobs. When aligned with African priorities, UK trade and investment can play a catalytic role in sectors such as green energy, digital innovation, critical minerals, agribusiness, and the creative industries, as we have already heard today. The AFCTA is at the heart of this new economic geography. The Africa Continental Free Trade Area is designed to create a single continental market for goods and services, facilitated by the movement of people and capital, and to lay the foundation for a future continental customs union. By progressively eliminating tariffs and non-tariff barriers and promoting regional value chains and industrial development, it offers a credible pathway to boost intra-Africa trade, attract investment, and advance our shared goal of an integrated, prosperous, and peaceful Africa. For partners such as the UK, AFCTA means that it is now possible to design cross-border strategies that use one African market as a platform to serve many. Regional trade diplomacy is the bridge between this continental vision and concrete opportunities. Across Africa, governments and regional economic communities are working to harmonize regulations, improve customs and trade facilitation regimes, and coordinate infrastructure and digital connectivity so that goods, services, and data, or data, depending upon where you went to school, can move more efficiently across borders. Our diplomatic missions here in London, including Zambia's, increasingly work as a network, helping investors navigate regulatory environments, aligning financing with priority value chains, and ensuring that emerging instruments such as export credit and blended finance support bankable cross-border projects. Nigeria's own reform journey and the UK-Nigeria Enhanced Trade and Investment Partnership are important building blocks in this wider architecture. The ETIP, the first such partnership that the UK has signed with an African country, seeks to deepen cooperation in areas ranging from legal and financial services to clean growth, agriculture, export diversification, and the creative economy. As this framework matures, it can generate positive spillovers for the rest of the continent by improving trade facilitation, strengthening standards, and opening new channels for value-added exports and services trade into the UK market. As High Commissioner of Zambia, I wish to underscore our readiness to work with Nigeria and the UK government, and with the UK and Africa, private sectors to ensure that these emerging architectures truly do support AFCTA implementation and regional value chain development. There is significant scope for triangular and regional cooperation, for example, linking Nigeria and Zambian capabilities in energy, agriculture, agro-processing, and manufacturing, while leveraging UK finance and technical know-how, and doing so within AFCTA, compatible frameworks that encourage scale rather than fragmentation. So let me conclude by saluting the inclusive spirit of this forum, which brings together African governments and UK policymakers, business leaders and development partners in the same room. Zambia stands firmly committed to the Africa-UK partnership, and that helps to operationalize AFCTA, boosts fair and sustainable trade, and translates our diplomatic ties into tangible jobs, technology transfer, and shared prosperity for our people across the continent. Thank you.
Your Excellency, thank you very much for that. Sorry I had to switch and put you on the spot, but I think you delivered it excellently and with such elegance. Thank you very much. So moving swiftly on to the panel, at which point now I'm going to hand over to Mrs. Awuneba Ajumogobia, who is going to be chairing that panel, and the show is yours. Thank you.
Good afternoon, all. I looked up and it was clear to me that the ladies on the panel got the memo. Please join me in giving a warm welcome to our esteemed panel. Mr. Korede Adenowo, CEO, First Bank of Nigeria, UK. Ms. Sabila Din, CEO, Din Consultants. Mr. Stephen Lynch, MBE, Director, International Trade, British Chambers of Commerce. We've heard today a macroeconomic outlook for Nigeria, a global investor perspective, and a policy view on trade and market access between the UK and Nigeria. This panel is designed to build on those insights and focus on what happens next. We will look at what actually becomes executable and what still stays in the way. Our discussion will be practical and forward-looking, with a particular emphasis on the next 12 to 24 months. As we are slightly behind schedule, we're very keen to hear from all of you, our panelists. So I would appreciate concise responses where possible to help us get through as many questions as possible. So, against the backdrop of improving macro direction, Dr. Kalle referred to this as macro convergence. When you think about the next 12 to 24 months, where do you see the opportunities in the Nigeria-UK corridor that are clearly viable, but still under-leveraged? Not because the demand is not there, but because execution, structure, or risk perception has not quite caught up yet. Sabila, let me start with you from an advisory standpoint.
You've asked us to be precise. I had about 6 key ones, so I'm going to skip through them very quickly. I've heard the word inclusive used a lot today. And as part of inclusive, I'd like to point out the women SME opportunity, which is already attracting a lot of investment. There might be DFIs here in the audience itself, but certainly the DFIs we work with, such as IFC and various others, are committed to the growth of women SMEs. Let me explain why. At the moment, 10 to 15% of the funding goes to female SMEs. These female SMEs could add 30% to GDP if that financing was increased. There's another issue with the female SMEs, which is market access. I have to say Zambia, women in Zambia come the highest in terms of exporting. So big round of applause there. Nigeria is not far behind, so I wouldn't like to say that Nigeria is right at the bottom. I think Nigeria is number 3. The point here is, where is growth going to come from? I think that's the question we need to ask ourselves. What are the drivers of growth? Financing is one. Is capital committed to financing? Yes, development banks are committed to financing. Are commercial banks committed to financing women SMEs? What I would say there is that the commercial banks are very much developed to finance larger corporations. They need to embrace digital. The digital players, I think it's
MI money in Nigeria has just completely taken over the market. So they're coming to eat your food or lunch or whatever we want to say. So there are other sources of, I heard blended finance talked about very briefly, and that is a very topical area that is now being discussed. Blended finance means taking philanthropic capital and increasing the first risk appetite. Insurance companies are coming in. Now, Nigeria is ripe to have a conversation with an insurance company to increase that first risk capital with the DFI and the philanthropic capital. There is a lady, a Nigerian lady, who's a great philanthropist. So, and there's a lot of philanthropic money in Nigeria. That will open up the liquidity pool for the female SMEs. I could carry on about this, but what are the actions we can take? What would be my recommendations to this panel? Signal policy support for a women-centered ETIP workstream, please. Identify 2 or 3 pilot schemes for women-focused trade corridors. I would pick agri, and then create links with MNOs so they can supply the MNOs. Require gender disaggregated ETIP metrics, please. Align trade finance and SME support institutions to reduce friction for women-led firms. One very quick thing we could do is in Nigeria, there is already a trade supply, digital trade supply institution that's backed by the IFC. It's facilitating working capital for SMEs in Nigeria. We should look at how we can take it cross-border. So I'll stop there.
Yes, thank you, Sabina. Clearly a very, very important conversation that requires much more exploration. However, I would like to hear from the other 2 panelists. What are the opportunities that you see that are clearly viable, but still under-leveraged within the context of the Nigeria-UK corridor? So we'll start with you, Stephen.
Well, thank you very much.
You can just take it as bullet points.
I will take it as bullet points.
Thanks.
And I think actually it's been incredibbly helpful following our trade envoy and our lead for Africa, because they've actually mentioned some of the major opportunities specifically that are outlined in the trade strategy and industrial strategy. And the trade strategy, just to say, has really emphasized Nigeria as a key market. One thing I will say is the potential. I've heard that word continuously coming through. The big challenge that we have is it stays in this room. And I think that is the challenge that we need to actually push towards. So at the British Chambers of Commerce, we have 50 chambers, 100,000 members in the UK. I'm sorry to say only 2% of those businesses do any form of trade with Africa, and less than 1% is Nigeria. That is the challenge. We have to get it out of these rooms and around the country. One thing I'll mention, I spent 12 years in China. 1 in 8 people live in the global West, 7 in 8 don't. And I think as a nation, as a UK nation, we actually need to understand that. There's opportunities for us to collaborate with third markets. So I do understand the investment taking place into Africa through China. Massive opportunity for us as a UK is that financial professional services creating the deals in Nigeria. But I will say, the biggest opportunity around trade and trade strategy, strategies don't create trade, it's businesses. We need to have more people-to-people dialogues, more connections, and it needs to be taken around the country, because I've seen it time and time again. The businesses that engage with Africa see the opportunity. They just need to see the opportunity. They need to come and see that face to face. We need to create more of those dialogues, more of those engagements. And that's where the business sector can genuinely step in. We can work closer with UK government, with Nigerian government, to actually create those connections. Because again, I go back to it. We've got finite resources, but actually leveraging our opportunities from business and government is really, really important. So I will finish there, that essentially we cannot keep talking about opportunity and potential. We have to get around the country, get talking to our businesses. And to finish, it's not a lack of willing, it's a lack of knowledge.
Thank you. Korede, is there anything you'd like to add to that?
Well, just to say that, the opportunities that we see that British companies can tap from, infrastructure, healthcare, digital, the creatives. I know UK has been all over the creatives in Nigeria and in Africa. So that's stating the obvious. Transport and logistics, those are areas that there are opportunities. Give an example. If you look at the 25 port concessions in Nigeria, 8 of those agreements have expired, awaiting either new investors or rollover of the older, the current investors. Another 18 are going to expire. So that's an opportunity, just waiting to tap into. If you look at the airports as well, the concessioning agreements are all open for investors to come in, for other airports in the UK also to come in, or airport management companies to come in, and also form partnerships and also invest in airports. So logistics, infrastructure, energy, healthcare, digital creatives, huge.
Thank you. So staying with you, Korede, let's look at how those opportunities translate. As we build on both the macro outlook that we heard earlier and the opportunity areas that we've spoken about, as a banker, you've been a banker in Nigeria and now in the UK. Not every transaction benefits from reform momentum. From a banking standpoint, what is it that tends to separate transactions that actually get financed from those that stall?
Thank you. I'd say, first of all, the strong sponsorship. Who's the sponsor?
Could you explain?
Okay. It's not the territory of name lending. It's not just name lending. The sponsor has to have credibility and track record. Cash flows. A lot of banks have invested in the past, invested against transactions, and it's a single transaction that doesn't work out. So you want to see consistent cash flows of that business, not just the transaction. The contract, validity of the contract, because that also speaks to the legal environment and enforcement of that contract. Now, speaking to UK...
Can I just steer the conversation a little bit?
Yes.
So if we're looking at things that could cause transactions to stall, could it be the sector selection, the transaction structure, the counterparty quality, or the confidence in execution?
Not necessarily.
What have you seen?
Yeah, you need certain basics before you go to structuring. A lot of people feel that if they structure a transaction, all the risks are mitigated. No. Strong sponsorship is very basic. Track record, cash flows, strong counterparties who are off-taking, convertibility, transfer and convertibility risk, because we're speaking in the context of a cross-border UK, Africa, UK, Nigeria. That's what we're speaking to. So how do you get your FX out? Political risk. So those are the things you need to take into consideration, that the banker will look at whether this project will go through, or this transaction will go through, or it will stall.
Thank you. So still on risk, Nigeria is often described by investors as high potential, but complex. In your experience, which of the risks would you say are structural, genuinely, and which are more often misunderstood or mispriced by UK businesses?
let me say that.
You know, I'll add another question to that. Where can banks play the most constructive roles in helping firms mitigate those risks rather than avoid the market altogether? Steve talked about how we've got to take these conversations out of the room. So how can the banks play an active role in being that catalyst?
Okay, at First Bank, what do? We give a lot of advice. We do a lot of introductions. We connect, and we do trade facilitation. One mistake that a lot of investors make, their first port of call is their lawyers or accountants. The lawyers and the accountants, sorry, if you're here, are not in the weeds of the transaction. We are in the weeds of the transaction. The lawyers, the advocates can actually draw up the agreements, but in terms of the practicality of how that transaction will work, they need to get inputs from the banks. From my own experience, when investment flows started going into Nigeria from around 1999, aside of oil, we always encourage foreign investors, talk to your bankers. We will tell you the nitty-gritty of a trade cycle, the nuances of the trade cycle. Now, looking at the risk environment, I would look more positive. And I would say, look, we have a common language, common judicial system. UK may be unitary. The difference with Nigeria is you have 36 sub-sovereigns and one sovereign. But at the end of the day, there are more similarities than differences. So if you're coming into the market, don't come in short term. Those who have made money in Nigeria have come in long term. They've been there 20, 30, 40, 50 years. It's a long-term horizon. Now, I'll give you an example. Quite a number of businesses left during the dark days of forex scarcity. The businesses did not die. People bought them. And the businesses are surviving and doing very well today. So the industries are still there. The businesses are doing well. But the previous promoters left and are losing out. PZ Cousins of Manchester almost also beat a retreat. The regime changed, policies changed, they are staying back, and many others. Those are the considerations we need to understand.
All right.
Could I just add one point there? I think we're also moving into a very new world. You know, geopolitical instability, tariffs, sanctions, supply chain shocks. You know, one man is ripping up the rules and rewriting them on a daily basis. You can guess who that is. You know, that is bringing around instability globally, and I think this perceived risk, many of these risks that we're talking about, become real risk. And businesses, I can see it certainly here in the UK, stand still because they are just so worried. We need to give them this insulation, this support, this credibility that actually there's opportunities around the trade and the investment. Because again, I think we are moving into a world that is moving away from globalization, the world that we grew up in. You know, it's not going to become less fragmented, it's going to become more. So actually these trade agreements, this insulation, this people to people, this cultural connection is absolutely critical at a time that we're living through. And I think, you know, again, the risk is perceived, but it might not actually be actual. So we need to kind of put support mechanisms in place.
I see that as an opportunity for Nigeria and Africa.
Yes.
Because there's now more perceived stability and less volatility.
Yes, absolutely. Thank you.
Can I just come in there? I think one other thing we need to do is to provide people with businesses with market access. and facilitate that. And I would use the DMCC in Dubai as a great example of how through a single point of contact, they have given businesses access to the market. And I think that's what Africa needs at the moment. They need something like that in Africa, where African businessmen and where international business people can come in, and that particular unit is what is facilitating that cross-border trade. I mean, what the DMC have said, they've done a brilliant.
Thank you, Sabina. Stephen, chambers of commerce like this one, business networks, they sit in the space between policy ambition and commercial reality. In your view, where can the networks add the greatest practical value today? In information, convening, risk signaling, or early stage handholding? And where should they be careful not to oversell market readiness?
So I think you've just mentioned everything that we promote that we do, which is absolutely critical. I think, especially in this context, it's about that last mile. It's about that last mile of policy. That's incredibly important. I think our role here in the UK is to give that market intelligence, to give that trade policy into government about these opportunities. And I think it's our job now as chambers, both domestically and internationally, we have 6 chambers on the African continent, to actually promote that opportunity. But again, I go back to, we can't just talk about opportunity. We need to give them those frameworks, those insulations, that market access, from a practical perspective. What does that actually mean? Because again, it's very easy just talking about a trade strategy. That doesn't mean anything. It's businesses that create the trade. It's the people that create the trade. So I would suggest that we need, moving forward, we need to work closer together in regards to our chambers. And that means trade delegations, going out, seeing the market, understanding the opportunities for both goods and services. I will say from a UK perspective, 80% of our economy is services. We spent the last 20 years trying to promote an industrial strategy around goods. It's still 80%. You know, that is our opportunity moving forward. And I think that is a lot of the opportunity we have in the room with the investment opportunity in Nigeria and certainly in the African continent. So I would suggest our opportunity is creating those trade bridges, both for the investment into this side and also to the exports going outbound. But again, I go back to, we've got 50 chambers around the country. You know, Manchester, Newcastle, these are genuine economic hubs of the region that can and should be doing more. And we really want to promote that opportunity. So it's everything that it says on the banner, market access, you know, policy, advocacy, but it's also these connections that we really want to make. And so I would say that's our opportunity. And a big takeaway for me from this room is I do not want to talk about potential the next time we come. It's got to be the reality, as Rob mentioned.
Okay.
Can I
well said.
Idea?
Well said. I've got one last question, and you can add that to it. One last question for each one of you. If you had to leave this audience with one thing, one decision or one action that they should prioritize, what would that be? I'll start with you, Korede. One thing.
1 minute.
One thing in 1 minute.
I would say look to your banker. First Bank UK set up 1894. It's 130 years old.
Thank you.
Look to your banker. We would handhold you through your investing journey, you know, into Nigeria. Thank you.
Sabina?
Certainly will. Partnerships. I think I'd leave it at that. Just find a strong partner that you can enter the market with.
Thank you. Stephen?
My final comment will touch upon the politics and the business. Florence mentioned she's the trade envoy for Nigeria. Let's get a trade delegation between business and government out to Nigeria, and let's really promote that bridge.
Thank you. So thank you very much to our panelists for a very thoughtful and practical discussion. We've heard today that opportunity does exist, but that execution, discipline, and partnership are ultimately what turn frameworks into outcomes. Please join me in giving a warm round of applause to our outstanding panel. Well, please.
Thank you very much. Sincere apologies that it's taking this long. Just two quick things that are going to happen, and then we have to move into the next room because they need this room. We just want to quickly take pictures with the panel and the speakers because the Right Honorable is about to leave. So we just want to quickly take pictures in 1 minute. Then after that, Access Bank will just want to talk to us very briefly. Well, partners' rights, really. And then the DG gives us closing remarks, and then we move next door because that's where lunch is. So very quickly, pictures, please. Can we have the speakers, please? I think you should be next to President. Yes, you speak. Okay, hey, come. It's your money now. Let me stand on your range. Okay, front. Stand there.
Can we have the panelists, please? Just the panelists and the speakers as well, please.
You're in? Yes, you're still part of it. Yes. Yeah.
Everyone's just looking straight to my name. Thank you.
Thank you very much. Come on.
Good. President. And we'll have first panel.
Thank you. Oops. Access Bank.
Wow, that's interesting. Yes, thank you. No, it has to be shorter. We have to just make yes.
Distinguished ladies and gentlemen, if I may have your attention, please. If I may have your attention, please. Please, just two more things very quickly. Two more things. Hello. It's still one meeting. It's still one meeting. It's still one meeting. Okay. We have Access Bank. We quickly talk to us because it's Access Bank is one of the people that made this happen. So they want to talk to us very, very briefly, and then the DG for the closing remarks, and then we move next door.
Thank you. Good afternoon, everybody. I think you've made my job a little trickier because it's at the same time we're taking pictures and doing some other things. However, even though this event is about to come to a close, I also stand on existing protocols. Good afternoon, everybody. It's a pleasure to be here and an honor to address such a distinguished audience. At Access Bank UK, we have the advantage of our Nigerian parentage. We sit at a very good intersection. One, we understand the UK market, its regulatory environment, and all that comes with it. At the same time, we have a deep understanding of Nigeria, its economy. We've talked a lot about it today, and the entrepreneurial energy you could catch from Nigeria. This gives us a unique position, and it poses on us two things: responsibility and opportunity. To be at the center of this relationship, supporting businesses. It was mentioned here about access to market, and I think we are strong in that. We've been operating in the UK for 17 years plus, and we give you that access to capital, to trade finance, and cross-border expertise. The UK-Nigerian economic relationship is natural and long-standing, but it's also evolving. Of course, we've heard today Nigeria remains one of Africa's most dynamic economies. We've talked about creatives, we've talked about energy, we've talked about the priority sector, one of the priority sectors, which is financial services that we're part of. So in today's global environment, the uncertainties we all know about, which have also been mentioned here today, the compliance requirements, you always need a trusted partner to help you. Partners who understand both markets, Nigeria and UK, who can move quickly and who are committed to long-term. We've also mentioned here today about long-term being something that is worth looking at. We're looking at sustainability. So our role is to help you de-risk your transactions. This role we embrace at Access UK is with this spirit and guide that we are here today. Let us not only transact, but transform. Let us not only connect, but create. Together, we can shape a future where Nigerian-British enterprises are not just partners, but pioneers of global excellence. So the charge is for us to pioneer global excellence. This is why forums like this matter. They bring together policymakers, investors, and business leaders to move beyond ambitions and focus on practical solutions, sustainable solutions, to help you unlock investment and strengthen the trade flows and deliver real impact. Access Bank UK promises to do that. I thank the organizers, NBCC, the co-sponsors, for creating this important forum and for their contribution to strengthening the ties. My goodwill message is simple. May we continue to dream bigger, act bolder, and inspire one another to reach higher grounds. We look forward to working with you all to turn conversations into contracts and contracts into strong connections. Thank you, and I wish you success in your endeavors.
I think that was an excellent presentation under the pressure that she had to deliver it. Very well done indeed. Very well done. So DG, the closing remarks. DG is the one standing between you and lunch. So closing remarks.
Okay, good afternoon, everyone. Thank you for being part of what has truly been a very impactful conversation. And my job here is very simple, just to talk about what we briefly do at the Nigerian-British Chamber of Commerce. We're here to connect, to convene, and to catalyze. And at the moment, we're currently strengthening our UK network and deepening our footprint as a trusted getaway for organizations looking to engage in Nigeria, whether through trade, investment, advisory, or market entry. For those in the room today, if you're looking to If you're interested in joining the chamber, partnering with us, or learning more about the work we do, how you can connect to the Nigerian market, please just reach out to me. I'm not going to stand in your way of lunch. And the conversation does not end here. It continues through our programs. In March, we're coming back for a trade conference, and we're also hosting a breakout session at the Driving International Trade Conference happening in March as well. And thank you so much once again to our speakers, to our partners, First Bank, Access Bank, DCSL. We're very grateful. And to IOD for bringing everyone into this room today. Thank you, and have a wonderful lunch.